Thanks for those of you who joined. Just get started here in a minute. Should we get started, Stephen?
Absolutely.
Okay, great. Well, welcome everyone to the Maple Business Council virtual spring meeting. A couple of years into this, we're still shocked that we're saying virtual, but here we are, and we appreciate you taking time out of your day, in light of your busy schedules and what's going on around the world these days. So definitely appreciate you taking the time. So today we're going to give you a brief report on Maple. And then we're going to have two presentations today. We're going to have Investissement Quebec and Fasken Law presenting. And then we'll close out the session today with a quick sort of what's upcoming, and then we'll adjourn the meeting. So from a logistics perspective, we are recording today's presentation, and a copy will be made available for follow-up in a communication from us. Your questions are welcome. Please enter them in the Q&A box during the session today, and we'll try to get to as many as possible. And we'll do that after each of the individual presentations. So just wanted to talk about our community and how it's been growing. So, where is Maple? We started in Southern California, covering Los Angeles, Orange County, and San Diego. And then we added British Columbia programming back in about 2017. And we formalized it as a chapter in 2020. And then in 2020, we also founded Maple, New York. So we're excited to see more dots on the map, I guess, and looking forward to more of those in the future. So what we really like about what we've been developing is we're sector agnostic, we're growth stage agnostic, and we're really trying to cover the map as it relates to people engaged in the community. And so you can see here that we cover a broad variety of sectors in our membership, as well as being in 21 markets across the US and Canada. And our partnerships are critical. We've had great partnerships with a number of organizations going back to the beginning. And in 2021, we also signed partner agreements with the Community Tech Outposts organization and the Alliance for Southern California Innovations. So really excited about its growth. And with that, I'm going to hand it off to Stephen.
Great, thank you, Rob. And welcome everyone. We're excited to be able to share today's program with you. And also happy to report that the new year is off to a strong start for us in terms of membership. We've welcomed 3 new members already this year. Sapan Samzadeh is a Canadian expat and former LA building commissioner who is the CEO of Sustainable Technology Solutions in Los Angeles, which is using a Canadian technology to measure energy loss in building envelopes for commercial buildings using drone technologies. So some very cutting edge work going on here in Los Angeles, and excited to have his participation. And as you know, of course, from our perspective here in Southern California in the United States, we look to make bridges to all of Canada. And earlier this year, we welcomed Invest Alberta as a senior corporate member of our community. And they are the investment attraction arm of the province of Alberta. And here in our backyard in Orange County, California, we're excited also to welcome Roland Dga Corporation, who is the America's arm of Japan-based Roland Dga. And this is a company that provides innovative digital printing and technology solutions, such as wide format printers, engravers, scanners, and milling machines for the creative and home craft markets. So again, as Rob said, there's a lot of strong breadth of sectors represented within our community. On the content side, since our last meeting in December, we've had a number of interesting perspectives shared in our Momentum newsletter, including an overview of the work of the International Business Development Team at the Consulate General of Canada in New York. We were privileged to have Senior Trade Commissioner and Counsel Nigel Neal provide an overview of the work of his team throughout 2021. And also in that issue, we had RSM Accounting and Consulting Firm talk about the middle market and provided economic snapshots of what was transpiring in Canada towards the end of the year. More recently, we've had articles this month from QA consultants looking at the implications on quality engineering from the continued growth in blockchain and cryptocurrencies. And we also have perspectives from Ontario Trade and Investment offices in San Francisco and New York regarding the Ontario economy and economic ties between Canada and Ontario with New York and California. This event, as Rob said, is recorded, and this will be available afterwards for your reference and to share as an on-demand webcast. And we've run a couple of really interesting programs in the last few months as well. Our New York chapter, led by John Costanzo, did a wonderful panel discussion on renewable and sustainable energy collaborations between the province of Quebec and New York State, with the participation of Boralex, Hydro-Quebec, the National Offshore Wind Research and Development Consortium, and we were honored to have Delegate General Martine Hébert also join us for that discussion. On a totally different standpoint, we had a terrific discussion about understanding the issues and implications of forced labor goods with respect to compliance and customs enforcement, with a presentation from one of our corporate members, Livingston International, who is the largest Canadian customs broker in the country. And in that event as well, we looked at benefit strategies for growing companies and a compare and contrast between Canada and the United States by John Griffin, the president of Sterling Capital Brokers, who is Canada's largest benefits consulting firm. So again, you can see the breadth of topics. So one of our speakers today is Dan Silverman, and we're excited to have Dan talk in a few moments about the work of Invest Quebec. And I'll just kind of put a little plug that in the coming weeks, you're going to see new episodes of our popular Maple Conversations video series, where we sit down with members and partners to hear from them about their areas of focus and their perspectives on markets and sectors. And we'll be releasing episodes with Dan and also Mary-Eve Jean, who's the Vice President of Exports for Invest Quebec. So look for those coming your way. Those come out through our social media channels. And then on a weekly basis, we're curating news of importance and to our community within the business and cross-border trade and investment circles in Canada, United States, through the variety of our social media channels. So we encourage you to follow these. We do have separate channels for our New York chapter and Southern California. And then we have a lot of content that is archived on our website, as well as our video channels as well. So that continues to be ongoing reference information for our members and partners. So now it's my pleasure to be able to introduce our first speaker today from Invest Quebec International, Dan Silverman. Dan is the Foreign Direct Investment Vice President, and after a distinguished career in investment attraction in Quebec and also in Ontario, in January 2020, Dan joined the newly created division of Invest Quebec International as their Vice President of Foreign Direct Investment. And Dan leads a team of over 50 FDI professionals based in Quebec and across 12 international offices. This team is responsible for talent attraction and immigration, as well as attracting the FDI to the province of Quebec. And importantly, working with foreign multinationals on their reinvestment projects throughout the province too. And in addition to his responsibilities at Invest Quebec, Dan serves as a director on the International Economic Development Council Board of Directors. So with that, Dan, I'm going to turn it over to you to share your presentation, and looking forward to your talk today. Thank you.
Great. Thank you. Thank you so much, Stephen. I'm going to share my screen right now. Please let me know if it shows up properly. There we go. All good, Stephen?
Let's just make that full screen and we'll be good to go.
I think you just need to swap screens again.
I'll try doing that.
Setting at the top. Mm-hmm.
How's that? We're back the other way. We good there, Robert?
It's not full screen at the moment.
Okay, froze.
Oh, okay. Sorry about that. Well, as I talk about IQ, I'll start. Well, again, my name is Dan Silverman. I'm the Vice President of Foreign Direct Investment with Investissement Quebec International, and I'll also be speaking on behalf of my colleague, Marie-Ève Jean, who unfortunately couldn't be here today, who is the Vice President of Export and Internationalization here at Investissement Quebec. And Marie-Ève manages a team of approximately 150 people throughout 33 delegations outside of the province of Quebec. So that includes in Canada as well as internationally. And I'm just going to see if we are all good on the sharing. Screen 1, screen 2, share. And if I make it bigger there, how are we there, Robert?
It's still in the upper kind of section there to swap screens. We're seeing the presenter view.
Okay.
So I think it's that second menu.
Yeah, just trying to. There we go. And that should change it.
Perfect.
Perfect. Great. About Investissement Quebec, we are the financing corporation and primary economic development for the province of Quebec. So we are responsible not only for foreign direct investment attraction, exports of Quebec-based businesses or businesses that are looking to export, foreign businesses that are looking to export from Quebec, but we're also responsible for certain levels of talent attraction, innovation with our division of the CRIC. And we also work with a regional resource team and energy team in terms of identifying opportunities for Quebec to be more green and encouraging more local buying within Quebec. We're currently at about 1,000 employees. So within the last 18 months, we've doubled because the export team was a ministry. The regional resource team was a ministry, and they were both put into Investissement Quebec, giving us about 1,000 people in about 25 different offices throughout the province. About Investissement Quebec International, we're also newly created. We're responsible for foreign direct investment. We're responsible for export. We're also responsible for missions for both the Minister of Economy and in some cases other ministries. We have a presence in 37 different delegations in 19 countries and 6 Canadian cities. Mostly the export team is in each one of those 37 different delegations, and the foreign direct investment team is in about 15 or 20, I'd say 18 at this point. The services of IQI, Investissement Quebec International, essentially we work as any other economic development group looking to roll out the red carpet for potential investors that are coming into the province, but we're a little bit, I'd like to say a bit of a quadruple threat, because we're able to help support a foreign business that's coming in here with business intelligence, technology support, financial assistance, export assistance, but also in helping that company, once they establish here, attract talent, be financially stable with the different programs, government incentives, and programs out of Investissement Quebec that as we're a financing corporation, is very much like a bank. So there can be loans, low interest, no interest forgivable. Throughout the pandemic, we were very much active in the loan programs to support small business. And there happened to be an article in the Toronto Star about Quebec being head and shoulders above the rest of the provinces in terms of the recovery of the economy. And that's very much in part to the programs the government of Quebec put together, but also on the export assistance. Once a company establishes here in the province of Quebec, they are treated the exact same way as other Quebec companies, in the sense that Mariev's team can help them get into different markets, can help them expand, can help them identify intelligence and market potential. And really their mandate is to help identify new potential clients for businesses that are looking to expand internationally and grow into different markets. In terms of the FDI side, and on the export side specifically, it's, as I mentioned before, identify any procurement needs. Are there any government programs? Are there any international government procurement that you could apply for? Looking at identifying Quebec-based suppliers. These are for businesses that are abroad, that are looking to source products, source services from Quebec-based businesses. So the export team in each one of the delegations, might be Sebastian is on the line from our New York office, as well as Mathieu in San Francisco, are able to help you qualify as a foreign business of looking to source different products from different Quebec-based organizations that are looking at expanding in your market and distributing. Supporting that selection of suppliers, and really on the opportunity to create a way for you to meet with them and really organize B2B businesses between Quebec-based businesses and international businesses. Our network of economic partners, as I mentioned before, 37 different delegations. When we talk about our colleagues here at Maple, we have locations in Silicon Valley, San Francisco, Los Angeles, and New York, but we're throughout the United States, Europe, Asia, and into Africa and South America as well. So we have a large network. Some offices are staffed with 2 to 3, others in New York, for instance, is staffed with more than 10 people. So we have people in different markets across the globe that can help assist both on trade development, on foreign direct investment, and then there's also a culture mandate and a political mandate of these offices that we have. I'd like to talk a little bit about one of the core sectors of the government of Quebec right now, which is our Green Battery and Electric Vehicle Initiative. And I'm part of the steering committee with the Minister of Economy, the Minister of Environment, the CEO of Hydro-Quebec, and the CEO and the President of Investissement Quebec. We're obviously a strategically located province that has quite a cost competitive, low cost, renewable green energy that is hard to find anywhere else in North America or even around the world, other than probably some of the Scandinavian countries. We've got over 40 innovation hubs, research organizations. The free trade agreements that we have with different countries provide us as an easy landing point and an easy exit point. We have 18 deep water ports. So we're creating here in the province of Quebec, we've created a battery strategy over the last 18 months that's really going to go from the mine to the cell. So we have an abundance of natural resources: lithium, graphite, titanium, phosphate, cobalt. We're looking to leverage these to go into the cathode active material and the anode, which then goes into the cell, which can then go into packaging and then into a car, obviously. But our focus is really on getting the mine to the cell, and then from that point having the packaging potentially, and obviously the manufacturing being in other parts of the world, such as the United States and Ontario, but then coming back to us for the recycling. So we want to create a circular economy when it comes to the electrification of vehicles. So we've put aside roughly about a $2 billion budget to support this initiative, to grow this initiative, to attract businesses and to keep the ecosystem up and running. And on top of that, having one of the lowest cost electricity rates, a green energy, renewable energy, and a cost saving, as well as free trade agreements with different countries that are experts in this. And when you think about that, there's Europe and Korea. We're trying to become the location in North America to service the automotive and, quite honestly, the aerospace industry when it comes to manufacturing batteries and being a supply chain partner. As I mentioned, there's the free trade zones, but also the USMCA, CPTPP, CETA, CKFTA. But when you look at the map here on the right, we're very well positioned with some of the key players that you see globally to be that central point of contact coming in off the St. Lawrence River to take advantages of the ports that we have. And we've actually created a battery campus at one of the industrial parks and ports that we have in Bay Concours, which is halfway between Montreal and Toronto, just across the river from Trois-Rivières. It's a park that is serviced by a deep water port that is only available to the tenants of the park, but also the Canadian and British navies. But we're looking and we're creating this ecosystem of major players, of some announcements that are to be shortly public, but also the ecosystem of the players that we have here in the talent pool that we have. And that, when you look back almost 25 years ago, the discussion of the electric vehicle and development of the anode and the battery was part of a technology and a patent that came out of Hydro-Quebec. So taking advantage of the fact that we have Lion Electric here, that we have Novabus, Blue Solutions, Prevocar, Johnson Matthey, these are all companies that are manufacturing at this stage, not necessarily more on the commercial vehicle than cars and trucks for the regular folks, but buses. We've also seen a huge uptake in eVTOL, which is the electrification of the aerospace industry. So creating this ecosystem that's going to service the North American market, the European market, and potentially be a next step for businesses in Asia and Europe to come and take advantage of what we have to offer. So again, Canada is the largest electric vehicle market. About 50% of electric vehicles are sold just in the province of Quebec. So second after California specifically. And we're known for our transportation and electrification. We're really focused on the buses and the commercial vehicles, as you see here. What you have are two trucks from Lyon. You see the recreational vehicles that we have with Taiga. So we're creating not just for passenger vehicles, but commercial vehicles as well. When you look at a case study, Lyon being one, it's not a foreign direct investment, but it's more specifically a business that is established here in Quebec that has recently announced an expansion into the greater Chicago area. But where we've assisted is in supporting this business from its startup phase financially from the government of Quebec and the government of Canada, with the objective of the development of the US market. And so Marie-Ève's team has been very influential in helping them identify opportunities to sell their trucks and their buses. And you've seen announcements of them selling school buses into different cities throughout the United States, but also the contract they received from Amazon to be to support, I believe it was about 10,000 vehicles with Amazon. So they provided information on the subsidies in the States, the strategies, what RFPs might be open, and that resulted in the signature of multiple contracts for both school buses and with municipalities in developing a greater ecosystem for them. And part of their expansion is obviously in result to how to service that market and have a secondary location from Quebec, being in Illinois at the moment. Creative industries is another industry we're extremely strong in. When you talk about this, it's VFX, visual effects, film production, animation, television, publishing, architecture, design, over almost 12,000 facilities, close to 175,000 jobs in the market, and about a $14 billion GDP. Montreal ranks #1 in Canada in terms of the digital creative sector. Video games is a huge market for us here. Quebec is the second largest tech hub here in Canada. But a lot of this heavily relays on the video game industry and how this jumps into other sectors in film production, animation, and television, really presenting an opportunity not just for foreign businesses to come and take advantage of what we have here in the province, but also for Quebec services to be exported to California, to London, to Atlanta, to other markets that are looking to use the visual effects studios, the animation studios, and develop gaming here. Top 5 largest video game hub in the world. Big players here internationally, such as Ubisoft, Gearbox. Behaviors is a local business that has grown significantly. So we are the largest hub in Canada, over 13,000 jobs, 200 studios, not just in one specific area. We have studios in Montreal and Quebec City, but we also have studios in some of the different regions throughout Quebec that take advantage of the talent from across the province. And again, a very diversified ecosystem. So it's not just about the final product of a video game. It's about the development and the services, the upstream and downstream of the supply chain that comes into it. But some of the most popular franchises with Ubisoft, Assassin's Creed, Warner Brothers is obviously Batman, and Beanox, which is a great company also, is Call of Duty, which I'm sure very many people are familiar with. So this sector continues to grow, it continues to develop, the talent continues to come here. It's not just local based talent, it's talent that is looking to expand here to be part of the ecosystem that we have on the video game side. In terms of VFX and animation, again, a lot of transferable skills when you look at the sector, these two sectors with video gaming sector, but a top 10 hub for VFX and animation in the world. Rodeo FX is based here. We have Mel Studios, we have Squeeze, which is a Quebec City-based organization. Real FX comes from Texas. So about 28% annual growth, big kick during the pandemic, to be quite honest. 6,000 studio jobs in 2019. That's gone up significantly in the last 2 years. But our VFX and animation contract value tripled in the 3 years between 2015 and 2019. It's probably close to tripled again. The demand is incredible in this market, and it's a talent-based demand. And the companies are coming here to establish themselves and become known in the ecosystem as well. These are also services that are exported. A lot of these companies receive contracts from California-based studios, from European-based studios, Asia-based studios. So the work that we're doing is not just local. It's certainly not just for French television. The work that we're doing is for feature films and specifically series that are being produced on Netflix and Amazon and with some of the major studios around the world. Case in point, Pixamundo as a great one. VFX industry, for why they chose Quebec was really around the talent pool. And we're able to attract top talent from around the world. They're able to attract top contracts from studios around the world. We have a generous tax credit here at the province of Quebec, and they continue to grow throughout Canada, but they really decided to open in Montreal as the demand has been so high for the ecosystem that we have here. So a company that's been here for quite a while, and a company that continues to grow here, and a company that continues to attract not just contracts, but talent from around the globe to be part of what they're doing in the film and entertainment industry. And one of probably the top sectors that we're known for is IT and artificial intelligence here in Quebec. So I'm not going to go through all the companies, but when you look at AI and digital creativity, applied technologies, a lot of the top names that you see globally have a presence here in the province of Quebec. This is something that's very exciting for us to see, because the sector continues to grow, the talent continues to develop, the ecosystems and the partnerships and the opportunities for these companies to work with each other continues to grow, and it not only attracts additional companies to come here, but it creates additional ecosystems, innovation hubs that we're going to continue to grow throughout Quebec. Montreal is the center point of it. We have the supercluster for AI in the province of Quebec, and specifically in Montreal. Mila is one of the best known institutes in artificial intelligence, led by Yoshua Bengio and his team. So one of the top 3 best places to invest in AI is Montreal. Over $3 billion in investments announced since 2016, and over now 150,000 IT professionals. So, Mila has been a key point for why Montreal has attracted the Googles, the Facebooks, the IBMs of the world, and many of the other companies that are coming into here, but also how they've created this research hub and this partnership with the private sector, the public sector, and the post-secondary educations to further develop talent and to further grow the ecosystem and the ability for big players to come in here and partner with small players and develop IP and technology together. So a very interesting mix of sectors that come together with MILA. But, and this is also transferable. You can look at in the sense of, it's also transferable in the sense that you can look at economic development, bringing in different sectors of the world that are going to be centered around artificial intelligence and how these skill sets are transferable between each one of these sectors. AI solutions, again, fintech, life and sciences and health technologies, logistics and supply chain, retail, manufacturing. You see the list of companies that are in each one of these. These are local-based companies. These are foreign companies that expanded here, but a lot of these companies come here to take advantage of the talent pool, but also to look at expanding their horizons from what they have here in Quebec to service businesses from around the globe. So we continue to add to this. We continue to support it with talent attraction mandates that we have. And really what we're trying to do in this aspect of things is to make sure that Quebec-based businesses have an opportunity to go abroad, that these companies that are coming and landing here have an opportunity to partner with Quebec-based businesses, and that the export team and the internationalization team under Marie-Ève is able to help them go out and identify opportunities to grow in markets around the globe. In terms of cost, being here in Canada is certainly an advantage in terms of operating costs and salaries, but being in Quebec is an even bigger advantage to some of the other cities that we have throughout Canada. When you look at the salary in 2021 average tech wages, 62,800 for Montreal and just over 63,500 for Quebec City, significantly about 30% lower than some of the other major cities in North America. And when you look at an operating cost for a large technology business of around 500 employees, again, about a 30% difference in Montreal and Quebec City. So this is above and beyond any provincial or federal financing programs on the table. This is a dollar for dollar cost differential when you look at a New York market or Seattle versus Quebec City and Montreal. And then when I addressed it briefly, and I'm not going to go into too many details because our friends at Fasken are going to jump into some of the programs, but key government incentives and grants and tax credits. Investissement Quebec with the Ministry of Economy and Innovation runs the Esr Program, which is a program I mentioned earlier. It's a loan program, a low interest or no interest, forgivable or partially forgivable loan program, which is our nice way of saying a grant. So this is something that people can apply for and be part of a discussion to look at, depending on the size of the projects and the jobs that are created. This is very much related to job creation. An Esr program with the government of Quebec. We have a tax holiday for major investment projects of up to 15 years, has to be a minimum of $100 million investment. So this is something to take into consideration. I'll leave, the federal programs. The Strategic Innovation Fund is a program that we work with quite a bit with the government of Canada. This is something that is complementary to our Esr program. It's a receipt-based program, whereas our Esr program can be a little bit more on the cash up front. There's talent attraction with Emploi Québec. There's a tax holiday for foreign researchers and experts, so an up to 5-year tax exemption that increases over the 5 years the tax payment increases over 5 years, but it's quite a big drop from a 50% income tax bracket down to roughly 20%. You still have to pay the federal, so that's included in there. I'll leave the tax credits for the Fasken team, but on the other one is our energy transition. So we do have different economic development rates with Hydro-Québec that is really there to support high energy usage projects. And then quite honestly is our commercialization and export team, which provides subsidies to companies that are looking to go international. So this is the PSCE is a program that's offered at the Quebec level, and the Export Development Canada program is a federal level program. So I believe that brings me to my last slide, and on here we have a couple of our some contact information for our team. Jean-Pascal Saucier is based in our Los Angeles office on the foreign direct investment side, and Mathieu Cormier is in our office in Los Angeles. And I believe earlier I saw Sebastien, who is in our New York office. So I'm going to stop the share there and look at a little bit of the Q&A that we had to see if there's any questions. Great. Alan, I see a question from Alan regarding importing and distributing a Canadian company in California. I'm sure Mathieu would be happy to be in contact with you. There was a question regarding the financial solutions of the corporation to provide to international companies. The last slide is a high-level overview of that. We'd be happy to discuss with you in more details, specifics of your projects. To be quite honest with you, every Esr program is customized to one specific client. So there's no two clients that have kind of the same program. But I think that we'd be more than happy to discuss your project and talk about that in a little bit more detail. The main advantages of going to Montreal versus Toronto, well, you're looking at someone that did that prior to being the Vice President of Foreign Direct Investment here at Investissement Quebec. I was the Executive Vice President of Toronto Global, which is the economic development corporation for the Greater Toronto area. Cost is a huge advantage. When I was working in Toronto and we were competing with Quebec City or Montreal, one of the biggest issues we had was cost. Also talent attraction. Toronto is a much bigger mega city, I guess you could say, than Montreal or Quebec. But talent attraction was very difficult because the cost of living was exponentially higher. And the Quebec government offers international talent attraction programs through the Ministry of Immigration, but also with Montreal International, Quebec International, Drummondville, and to a certain extent, our team here at Investissement Quebec International. And that being said, salaries were and still are significantly lower throughout Quebec than they are in Ontario. And, unfortunately, there are no real provincial funding programs in Ontario like we have here in Quebec. Another question from William Edwards, is the talent in Quebec English speaking? There is a huge proportion of the talent in Quebec here that is English speaking. We are one of the most multicultural, I guess you could say, provinces, states in the world. And so it's not only that there's English speaking talent, there's French speaking talent, and there's probably a good other 100 languages of speaking talent that we have here in the province of Quebec. So the talent you need is here, and to supplement the talent that we have here in the province of Quebec, we do have those programs I mentioned earlier that can go and attract international talent from abroad to fulfill needs of specific companies. So I think that's all I have, Stephen, from Q&A that I see in the list here. I appreciate the opportunity to present today, and we look forward to helping you expand into the province of Quebec, grow in the province of Quebec, and help you find opportunities to grow your business from Quebec around the globe.
Thanks very much, Dan, for an excellent presentation. I'm curious, after a company has landed in Quebec and has been operating for a while, what sort of feedback do you get back from these companies in terms of maybe something that surprised them in a good way, or something that they're really delighted about, once they're operational? Do any things kind of pop up commonly in terms of that kind of feedback?
I think there's very much a perception that because Quebec is very well known to be French speaking, that it's going to be difficult to operate here, and they're very pleasantly surprised by the ability to operate here in this market. You're looking at a born and raised Quebecer with as an Anglo in the province of Quebec. So I think the ease of access to come and establish here in the province of Quebec is one thing, and the opportunity to recruit talent and really be a multicultural, diverse company is something that is very surprising to a lot of businesses that come here. When you come into Montreal, you come into Quebec City, or you come into pretty much any other city, there's an opportunity to create something here, but it's very much like expanding into any other city. There isn't a huge cultural difference, as if unless you were going, to different markets in Asia. So we're very much a North American market that has very similar services and very similar opportunities. And there are some discussions on the language sides of things, but they're very much generally surprised by the ease of access to get into the market and to become a Quebec-based business.
That's great to hear. Just to follow up to, over the course of the pandemic, and perhaps because of the pandemic, have there been any shifts in the types of inquiries that you and your team have been fielding regarding investment interest in Quebec? And how has that change been?
I wouldn't say there's been necessarily a shift. There's been a significant increase in volume as Quebec, and I'm sure it's only going to increase after I saw the article in the Toronto Star this morning. But the battery sector, the hydrogen sector, the life sciences sector have been sectors that have just exploded since the pandemic, and what we're looking to do here. And I think we're just seeing a lot more interest in Quebec as an expansion destination, because of the support that we gave to small and medium-sized enterprises to make sure they can keep their doors open and make sure they can keep their employees working, and the different programs that the Quebec government offered to make sure that these companies were able to make payroll and stay stable.
Great. Well, thank you again, Dan. It's fabulous content.
I see a question from Hank, or a hand raised at least. Stephen, I don't know how to address that one.
Yeah, you could come off of mute if you like, Hank, if you wanted to ask a question. Or maybe it was an accidental hand raise. Okay.
All right, we're going to move on then.
Thank you very much.
Over to you, Rob.
Great. So it's my pleasure to go ahead and announce our speakers from Fasken today. So Neil Kravitz is the co-leader of the firm's U.S. practice and is recognized as a leading lawyer in mergers and acquisitions, security law, and cross-border transactions. He acts for domestic and foreign acquirers and targets issuers, entrepreneurs, private equity funds, and investment banks with a practical, deal-oriented approach. Neil advises on public and private M&A transactions, equity and debt financings, shareholder activism, and corporate governance. Neil regularly advises boards and special committees on governance matters and on ESG, and recently presented on a panel involving Fasken Partners and the TSX on governance and ESG matters. Providing counsel on a wide range of matters, Neil has gained deep industry insight into the aerospace, life sciences, industrial, financial services, retail, and technology sectors. Consulted by security regulators on legislative reform, Neil is a widely published author and cited authority on securities law, and has lectured on securities regulation at McGill's Faculty of Law. Thanks for joining us, Neil. And Claude. Claude Jodin is a tax partner with the firm with a focus on corporate financing, financial instruments, the purchase and sale of companies, and reorganizations. Claude regularly assists financial institutions during major mandates dealing with large public issues of securities. He also advises large national and international public and private corporations on reorganization. The high technology and biotechnology industries continue to evolve, and Claude helps clients develop corporate finance structures that benefit from the maximum scientific research and experimental development tax incentives. Claude is actively involved in goods and services tax matters, and some of Claude's interventions before the provincial and federal tax authorities have resulted in major legislative or regulatory amendments. Recognized as one of the best tax lawyers in Canada by the Best Lawyers in Canada and the Canadian Legal Expert Dictionary, Claude has written a number of articles and delivered many seminars on new tax issues. So without further ado, we'll hand it over to the Fasken team. Thank you very much for presenting with us today.
Thanks very much. I'll just share my screen and then we'll get going. Can folks see the presentation now?
Not yet.
Not yet. Got some kind of message up from Zoom screen broadcast. Might be sharing a different screen. There we go. That's the right screen.
Okay, great. Thanks so much. We really appreciate being here today. Interesting way to present because Dan did such a wonderful job of explaining the benefits of being here. It's sort of like a funnel. So we'll take his general comments and get more specific as we go. First of all, Canada in general is a choice destination for businesses. We have a very stable geopolitical environment and stable economy, including our banking system. For those of you that will recall the 2008 credit crisis, Canada's banking system proved to be extremely stable, and you have a number of our institutions here whose business in the US actually exceeds their business in Canada, and that's true of actually of a couple of our banks. And following the 2008 credit crisis, there were some significant banking syndicates, loan syndicates, where Canadian banks were the lead bankers, even though the company wasn't in Canada. They actually had nothing to do with Canada at all. In Canada, most private sphere matters are within the provincial jurisdiction with certain applicable federal laws. For example, all property and civil rights, real estate, construction, education, commercial disputes, that's all of a provincial jurisdiction, whereas telecommunications, aerospace, banking, bankruptcy, and IP, that's a federal jurisdiction, just to situate you on what Quebec would govern compared to the feds, and that there's a little bit of overlap there. Like in the US, there are a number of forms of doing business in Quebec, not very different. Individual proprietorships, companies, partnerships, joint ventures. We have different types of companies. Certain provinces have other types of corporate entities, such as a unlimited liability company, which you might use for tax purposes because it's a pass-through for US purposes, but a corporation for Canadian purposes. Canada also has a federal corporate statute, and each province has its own corporate statute. So those are separate. You don't need to incorporate under both, but you have a choice to use what's called the CBCA, the Canada Business Corporations Act, or one of the provincial acts. Any federal or provincial company can do business throughout Canada. So it's not as if you incorporate under one of the provinces that you can only do business there, or you're somehow restricted as to where you can do business either in Canada or elsewhere. The various corporate statutes differ with respect to certain aspects. So there are some benefits using a Quebec company as opposed to a Canadian company. One of the most significant is that under the federal corporate statute, at least 25% of your directors have to be Canadian. So we often have people coming here and they struggle to find a Canadian director or ask us if we have Canadian directors. Under the Quebec corporate statute, there is no Canadian residency requirement. So you can have a corporation with directors who are entirely outside of Canada. The statutes also govern where your head office can be, and then certain financial tests that are applicable to different corporate steps, such as declaration and payment of dividends. Again, Quebec Corporation does have some advantages for some small and medium-sized businesses. For example, unlike a corporate statute, you can use unpaid shares as a way of financing the company. So under the Canadian corporate statute, your shares have to be fully paid when issued, and that's not the case for a Quebec company. So it does give you some flexibility, and there is some more flexibility in terms of governance. Trying to hit the high notes because I'm mindful of time here. One of the things I think to note about Quebec, and Dan didn't get to it that much, but he did talk about the types of companies that we have. Quebec is a highly entrepreneurial environment, and there's a very significant international outlook with larger Quebec companies doing a very significant portion of their business outside of our borders. And the entrepreneurial environment and spirit really applies not only to smaller companies that you would think would be run by an entrepreneur, but our larger companies do have quite an entrepreneurial outlook on things. Quebec, and including specifically Montreal, is home to a large number of multinationals, including Air Canada, Alimentation Couche-Tard, which is now, I believe, the third largest convenience store operator in the world, having acquired a number of businesses in the US, including Circle K and others in Europe, Bombardier, CN Rail, and we have a very significant number of large, medium, and small businesses, including some very significantly sized family-owned private businesses. Aldo might be a recognizable name, the shoe retailer, for example. So Dan touched on this, but Montreal and Quebec in general is a hub for activity in a number of sectors, including technology, AI, video games, with a number of incentives for companies to establish here, and a major draw for international talent. Again, Dan did an excellent job of covering that. A couple of specific examples that I think are interesting. Sonder, which is one of Fasken's clients. So that's a short-term apartment and lodging company, sort of like an Airbnb, but for a longer-term stay. That company was started here. It's now listed in the US, does business internationally. So, a technology company started here using all the benefits of being in Quebec, is now very much international and a very significant portion of its business in the US. So just kind of exemplifies what we're talking about here. Another more recent one that's quite interesting is a company called Paper. Started by a young Montrealer. Paper is an on-demand tutoring company. So, folks who have kids who work with tutors outside of school hours might hire a tutor who sits next to them for an hour and gives them a lesson on a particular topic. Paper is a text-based tutoring system where the tutor can deal with different demands at the same time. So the user messages the tutor, I'm having an issue with this, or what would you do here? And the tutor can respond and deal with different students at different times. Paper recently, again, completely Montreal established and based. They recently raised rather $270 million US based on a $1 billion valuation. So a unicorn level valuation, so to speak. And just another great example of a company that was, started here and uses all the advantages of a technology company here and has broadened its horizons. Most of its business is in the United States and has a number of very lucrative contracts with different districts and school boards in the US. So a couple of specific examples. A number of things of note when you establish a company here that's different from certain parts of the United States, but not all of the United States. So similar to the rest of Canada, our employment laws, there's no employment at will in Canada in general, but in Quebec. So when folks come here to either establish a business or more often to buy a business, they'll say, okay, we want to get rid of, this many people at the company and we'll keep the ones we want. And we have to explain to them that there's no employment at will. So there's a minimum notice requirement, minimum severance requirements that are set by law, minimum labor standards, occupational health and safety, and protection of private and personal information. Those are all governed by Quebec legislation. We have started to consider for a number of clients some of the interesting issues that I know folks in California have been dealing with. So whether it's Uber or Uber Eats and what their status of the drivers might be. There's a significant case in the UK as well in terms of whether they're treated as employees or independent contractors or somewhere in between. So that's something that we've dealt with here as well. As far as bringing talent here, Dan touched on it. So the actual person, the foreigner who wants to work in Canada, has to apply and obtain a work permit. To do so, they must submit an offer of employment from a future employer. A company that's proposing to invest significant capital here or to create or develop a business can get a work permit that's exempt from a regular process for investors, executive supervisors, or officers. And once you're set up here, you can temporarily transfer your officers or managers and some of your employees with specialized knowledge about your business. And others who come to Canada as part of a particular career development program can also be transferred. So we won't spend much more time on that. Use of the French language, Dan touched on this. I think I'd open by saying that I've been practicing for 27 years or so. The number of times that I've had a client or prospective client decide that they don't want to come to Quebec because of language issues, I think I can count on one hand without the use of all the fingers on that hand. We do have our rules. There's a Charter of French Language, which is also known as Bill 101, that makes French language the language of government and the law. There are certain rules that deal with signage and how prominent French has to be on the sign. Certain exceptions to that exist for particular trademarks. As you might know, businesses with 50 or more employees have to complete a franchisation program. That is usually not a significant challenge. We help a lot of businesses deal with some of these points when they come here. As far as online presence, technically, if you are based in Quebec, your website is supposed to be available to anyone who needs it in Quebec. There are ways that we help clients with that as well. You might have read about this a little bit. There's a recent introduction of a new bill by the current government of Quebec called Bill 96, related to the use of French language, which does have some proposed changes, including changing the number of employees where you need a franchisation certificate to 25 or more, some new rules on clear predominance of French on signs, and the ways in which businesses interact with customers, as well as the language of contracts. The status of that is pending, and it's going to depend on who's in government, who's in office at the time. But again, that's never been a barrier. And when you have a good, business case for coming here and all of the things that Dan talked about and that Claude will talk about, there are ways to deal with all of those. So that covers what I wanted to talk about, and we'll look for the Q&A, I guess, at the end of Claude's presentation. But I'm going to turn it over to Claude on tax matters and let him outline those, and we can deal with your questions at the end. So Claude, over to you. You just have to say next slide because I'm controlling the slides and I'll advance them for you.
All right. Okay. I can't open the video because the host is controlling it. So Stephen, it's on you. Okay. I guess we'll do it without the video. Well, good afternoon, everyone. So what I propose to do now is to bring you through essentially the tax part of this. Oh, there you go. This presentation. And as you saw in the screen, it keeps appearing and disappearing. I don't know if you're seeing that. Basically, I'm going to be dealing with two aspects. The first one will be sort of the tax environment, dealing with our tax ecosystem and choice of corporation that you can use in Quebec. Just to continue on what Neil has spoken about, and then dealing with three basic or the most popular incentives, because I don't have time, I don't think, to go through everything, but the first one being the federal R&D, federal and provincial R&D system, and then the other two would be multimedia and e-business. And if we have time, we'll deal with the other one. So you can go to the next slide, please. By way of introduction, we have, as mentioned, a federal and provincial government system where, unsurprisingly, they've each exercised their ability to levy income tax. And for non-Canadian control companies, our tax rates are at 15% federal and 11.5% provincial, giving you a 26.5% rate blend. And that would be on your business income, determined, on a net basis, like you would in the US. Our sales tax system in Quebec and in Canada is a two-level system. We have the goods and services tax at 5% and a provincial sales tax at 9.975%. You should understand that those are not true costs for anyone in business, because if you are in a business where you're making sales or you're in a business that will be making sales, all of the sales taxes that you incur in the context of your business can be recovered. It's sort of like a VAT system. You pay and then you recover it. So it's not a net cost, it's more of a cash flow inconvenience, if that. Next slide, please. Okay. Canada, in terms of payments to non-residents, has a withholding tax system similar to the US. And as you can see under the ITA, which is the Income Tax Act column, our basic rate is 25% on dividends, interest, royalties. Capital gains are taxed only partially, meaning only half of gains realized on the sale of assets are included into income. So for a non-resident, that would come out to roughly 13% tax. The treaty we have with the US is very generous and reduces most of the withholding to, you can change the slide, to either 0, 5, or 15, depending. Now, when we're talking about interest, for example, our local Income Tax Act reduces to 0 any withholding on arm's length interest for now since 2008. And you can change the slide. And this domestic exemption is actually completed with the Canada-US treaty, where interest actually is subject to 0 withholding by virtue of an additional exemption in the treaty. So essentially, we're looking at a 0% withholding on pretty well all interest payments except for participating payments. Under the treaty, we'll see dividends are subject to either 5 or 15% withholding, depending on the level of ownership. You can change the slide, please. Now, in terms of a choice of entity, I thought it would be appropriate just to speak for 2 minutes on what possibilities you have to carry on business. You can use, as Neil is presenting, a corporation incorporated under the laws of the province of Quebec. Each province in Canada has its own corporate statute, and 3 of them provide for something that is more familiar to the Americans, and that is a limited liability company. Our versions is an unlimited liability company, where essentially the shareholders are exposed to liability together with the ULC for its liabilities, but only in certain limited circumstances, such as in the context of a winding up or liquidation. You can change, please. Now, one of the major interests in the context of so in terms of the cross-border context, where a US entity is looking to do business or to acquire a business in Canada, the ULC has shown to be an interesting vehicle. So when we're looking from a tax perspective, we're saying a ULC versus a corporation. Well, both have a legal personality. And in that context, both provide a number of interesting elements to do business. As you see, I've listed out a number of elements where essentially the decisions you'll make if you carry on business is whether or not you want to put debt or equity to fund your Canadian subsidiary. So if you were putting in debt, for example, the interest on that would not be subject to any withholding in Canada unless you really made a mistake and became a participating debt. Our restrictions for deduction are limited here. We have a debt to equity ratio where you cannot deduct debt that goes beyond 1.5 times the equity that is invested. That's what we call the thin capitalization rule. We also currently have a draft rule that is being considered, which would restrict the deductibility of interest as a percentage of essentially EBITDA. And we're looking at, after 2023, approximately 30%, but that is still in draft stages. When you're considering whether or not to use a ULC, for example, one of the main elements that is both common to the ULC and the regular corporation is the ability to distribute paid up capital, namely the amount you've put into the company to capitalize it. Unlike the US rules, we don't distribute earnings first, we can distribute the capital. So in that context, a distribution of capital can be very useful as a means of returning certain funds to a US entity. Now, one of the benefits of using the ULC is that in most cases, it would be viewed as a disregarded entity, and therefore the acquisition of a, let's say, a target in Canada through a ULC would provide additional ways of accessing, if you wish, tax benefits. So for example, if you are purchasing the shares of a ULC through in Canada, the transaction can be treated as a purchase of assets in the US, which would give the ability for the US parent to claim depreciation in the US, not only on the cost of the asset themselves, which as in our system would have their historical cost. It would provide a way of allocating the cost of the shares to the depreciable assets. And my understanding is that from that basis, in the US, you have a deduction for the purchase of the assets. As mentioned, the paid-up capital can be returned to a ULC's parent the same way as any other corporation. The benefit of the ULC for a US person is that because the ULC is a disregarded entity, the actual distribution of paid-up capital is a nothing, in that not only is it not a dividend, which would otherwise be subject to a withholding tax, but it's also not treated as any transaction from a US perspective because the entity is itself disregarded. Finally, in terms of payments that would be made, let's say, to the Canadian entity for services, there is, my understanding, a big BEAT regime, which is a base erosion anti-avoidance tax. And because of the specific nature of the ULC as being a disregarded entity, you would not have an exposure to that tax. And so that's one of the last benefits. Now, as mentioned, we're going to try and deal with some of the tax incentives. The most popular one in Canada is the federal and Quebec SR&ED tax incentive. Now, the basic principles of this incentive is threefold. Firstly, all R&D expenditures are fully deductible in the year and can be postponed indefinitely. In other words, you're not required to claim the expenditures in the year you incur them, and therefore you don't run the risk of them being statute barred or through a limitation of number of years you can carry forward. You can just bank them and use them when income is actually realized, which is the case for certain R&D companies. In addition to the deductibility, one of the very interesting features of our system is to provide a tax credit system. And we're going to get to that in a moment to tell you about it, but this credit is in addition to the deduction and is based on the expenditures, and we'll see in the federal system, is based on not only the expenditures made for R&D, but also on what we call a proxy amount. So for federal purposes, instead of having to trace your overhead expenses that could be allocable to R&D, our system provides for an arbitrary deduction or an amount, which is 55% of R&D salaries. So you get to include that as part of your expenditures for federal purposes and for purposes of both claiming the tax credit. Next, please. So the expenditures from a federal and provincial standpoint. So for the federal R&D expenses, it's basically, as you see here, not only is it labor and material, but you also get the ability to claim a certain percentage of, let's say, fees that you would pay to subcontractors if you had to contract out R&D partially for with some other persons. Next, please. Okay. The tax credits in Canada for companies that are not under Canadian control are found under the first two lines and are essentially 15%. Now, this credit is not refundable, but is applicable against your income tax payable, your federal income tax payable, and can be carried forward 20 years. When you're dealing with a Canadian control company, that tax credit goes up to 35% on the first 3 million, and that is fully refundable. So there are circumstances, and we're going to see an example of that in a moment, where it could be beneficial for someone to partner up with a Canadian company to do some R&D. Next, please. Quebec has its own rate of system. Now, what's interesting about Quebec is that all of the tax credits are fully refundable with respect to R&D. So when you're dealing with a company that is not under Canadian control, the rate of the tax credit is 14%. So based on the salaries that are R&D salaries, you get a full refund of 14% of the R&D salaries. So that goes straight to the bottom line. And that credit can be increased to the extent that, for example, if you were dealing with a Canadian control company, that rate could go to 30% on the first 3 million. Next, please. As is the case for the federal, the provincial credit also applies to a number of relationships that you could find yourself in, namely if you were contracting with a university, research center, or other persons, you would be entitled to a percentage of the payments that you're making to such persons, either entirely or as a percentage of what you're paying. Next, please. So the example I want to give you is essentially where you have a US entity that carries out directly or through a subsidiary. The combination there would provide you with a 15% federal tax credit on all of your non-capital R&D expenses, and it would provide you with a 14% fully refundable credit on salaries. So if you can change, please. This is the example that you might find yourself in. Sometimes you have a Canadian company that's carrying on the R&D. And so we see a lot of that where Canadian companies are incorporated for purposes of doing the R&D on behalf of a parent that is a non-resident company. So the credits that this person gets essentially is the same as if the US company had carried on the business directly in Canada, and that is 15% federally and 14% from the province. Next, please. In terms of numbers usually tell the story. So if you look at this table, in an example where essentially we're paying $1 million in R&D, of which 800,000 is salaries. What we notice from this table is that the Quebec credits of $112,000 would be fully paid to the taxpayer, and with the deductions that are available with respect to the R&D and the tax credit at the federal level, your net cost to operate essentially $1 million of research comes to roughly 500,000, of which 112,000 would be paid to the company. So that goes straight to the bottom line. Next, please. So Daniel spoke briefly about the tax holiday. The only thing I would add to that is that the 60-month holiday is spread over 5 years. So it's 60 months over 5 years, and it is a partial holiday after year two. So for the first and second year, you have 100% holiday on your provincial level income tax, and you still have to pay federal income tax. And so you're roughly looking at about a maximum rate of about 25% of income tax. The other incentives that are popular in Quebec, and obviously we can't go through all of them. One of them is the Multimedia Tax Credit. The second is the Investment and Innovation Tax Credit, e-business, and incentive for deductions for the commercialization of innovation. On this last one, just to say at this point, it is geared towards companies that actually produce or develop products in Quebec and provides for a reduction in the rate of tax. So instead of the 11.5% that we mentioned, it can go down to approximately 2%. Next, please. Now, the first incentive I wanted to speak about, well, the second actually, is the Multimedia Tax Credit. So the interesting thing about this credit, which is essentially a provincial-based credit, which is administered by Investissement Quebec, in the sense that they have the responsibility to make sure that the entity that's doing the work qualifies and certifies that that work will qualify for the tax credits. Revenue Quebec is the one that administers the federal, the financial aspect, in that when you file your tax return, that is when you would actually get the benefit of the credit. Now, the interesting thing here is that you do not need to be a Canadian controlled company. So any corporation that carries on business in Quebec and has an establishment here would qualify for this credit. Now, the credit is quite generous in that it is up to 37% of eligible salaries. And one of the interesting features is that there's no salary, there's no cap on the amount of the credit that you can get. One of the features, obviously, is the salaries per employee, and there are certain there's certain limits there, which is approximately 100,000, which is below the threshold that Daniel was talking about. But this credit is fully refundable, and every year you'd be entitled to this credit to the extent you continue the activity, and you qualify by getting the certificate from Investissement Quebec. What this is geared to, essentially, I mean, it could be gaming is one of the good or easy examples, because the titles have to be produced on an electronic media that's controlled by software and allows for interactivity. And the 3 or out of the 4 types of data that you have is text, sound, fixed images, and animated images. Sounds a lot like a game. And the interactivity is a key concept. You have to have feedback, control, and adaptation. So that is the most popular one in the area of gaming and a lot of related environments. And as I think was mentioned so far, we have a great deal of presence in this area in Montreal, partially due to this. And I can attest that we've been involved in a number of transactions where US or non-Canadian entities have come here to establish a center for this, and they make use of this particular incentive. One of the things to remember is that this incentive is not by any means exclusive. And I mean by that, you could be claiming the incentives for research and development for partial expenses and claim the multimedia tax credit for the others. So the key is to look at which combination is most advantageous. And that's what we see a lot, where entities are saying, well, a portion of what we do qualifies for R&D. So they're claiming the 15% federal credit, the 14% fully refundable credit. And then on other salaries, they're claiming this 37.5% provincial credits. Now, just to make sure that I'm clear, the 37.5 is a Quebec credit, but the salary that qualifies for this credit could also qualify for the federal R&D incentive. Next, please. The next really popular incentive is what we call the e-business credit, which is really unique in that it's designed to support the development of information technology. And so this incentive essentially provides for a tax credit of up to 30% for employees that qualify. So in the sense that if you have taxes payable, you would have 30% of your salaries as a tax credit you can apply to pay that income tax. And if for some reason you're not taxable that year, well, there's a portion of that that is refundable. So the first 24% of that per employee, with a maximum of $25,000 per employee per year, would be refunded to you. So it's a question of figuring out what is the best combination. And it is it's a very popular measure. And next, please. So the areas that are covered by this are, as I said, just the development of e-business, and most activities that are information technology related would qualify. And here the companies don't have to be Canadian control. All they have to have is at least 5 employees, where these employees devote more than 75% of their time to the development of IT. And we can tell you that we see a lot of those. I see the time running. You can move on, please. Beyond that. So I provided 2 slides with some numbers because it's always important to see what this means. So on this first example here, which I have to admit, I didn't create this one entirely. It is one of these examples that's commonly used where if you have a number of employees earning a certain amount, and you see here that they qualify for the federal credit, which is the R&D credit, and some of it qualifies for the 30% e-business credit. So on roughly a budget of 1.6 million, the total credits available run about 850,000. And if you go to the next slide, on a smaller scale, what that means is, for example, on a personal, if you had one person whose salary was 100,000 and 25% of that person's time is devoted to R&D and 75% is devoted to the development of e-business, what that means is essentially incentives that are the federal incentives are the R&D ones. There's provincial incentives, which are partially R&D and partially the e-business tax credit. So a net of $100,000 gives you a refund of a certain amount of money here. And the net is about 73,000, of which 18,000 is paid in cash. So that kind of covers that. I don't know if I have time to continue, but can we go to the next slide? So the last thing that I want to just touch on is the investment and innovation tax credit, which essentially is designed to encourage businesses to invest in the modernization of equipment. And so the credit basically is based on whether or not based on where you're located. So if you were located in Montreal or some other region, the credit could be either 10, 15, or 20% based on that geographical preference. And the maximum is $100 million. So presumably it would take a while to get to that. And it's essentially there to encourage the acquisition of manufacturing, processing, computer equipment, management software, and that's it. The criteria here, again, is you just have to carry on, next slide, please. You need to be carrying on business in Quebec and have an establishment and not be in one of the areas that they're not trying to incentivize with this, namely aluminum or refining. So I think that covers what I wanted to talk about today. Thank you. And if you have any questions, I'll be happy to talk about it.
Thank you very much, Claude and Neil. It's really exciting to see the menu of tax incentives and opportunities that can be blended together at a federal and provincial level. Just curious, has SR-RED been changed much over the years? And do you anticipate any significant changes on the horizon?
Well, it's been improved over the years. I mean, it's viewed as a permanent measure in Quebec. And for the federal government, it's also been a big driver simply because it attracts a lot of investment. You'll recall at one point we had lots of biotech companies, and we have them every year because they qualify for the Quebec and provincial incentives, federal incentives. And that's how Ubisoft came here, because they started with 2 people and now they're 2,000. And the Multimedia Tax Credit was a big helper. The R&D incentives were also there too, because as I said, you can match them. And it creates an environment. We're not technically buying jobs. We're providing an incentive for someone to see the talent pool here and then find the value, and in addition, help them essentially in starting, because this provides a great source of funding for companies. And I guess one of the points that is important to note, unlike other jurisdictions, research and development expenses here are usually from $1. I mean, there's certain exclusions, but they're not incremental. So what I mean by that is that in some jurisdictions, and I believe the US is one of them, you get a certain benefit for spending more than you did the previous year. Whereas here we look at every year as a single case, and you fit into the boxes to get the incentive or not.
Right. Thank you. Well, I think in the interest of time, we're going to need to just wrap up here with a couple of content slides on what's upcoming. And we'll be providing the contact information and the content for everyone who would like to follow up further with Neil and Claude and our Daniel as well. I'm just going to quickly bring up update on what's coming up within the Maple community event-wise. Our next event will be on April 13th and hosted by our British Columbia chapter in Vancouver. The topic is the metaverse. And of course, we've all seen Facebook rename themselves, and significant acquisition with Activision. So what is the metaverse, and what are some of the opportunities that businesses should know about as we move forward in this evolution of Web 3.0? We'll be having studios from Canada and potentially also Southern California in discussion on this topic. This information is available on our website, and more information on how to register will be provided. On the community event front, the U.S. Commercial Service is hosting a couple of interesting programs coming up very soon on the province of Quebec with respect to critical minerals overview and opportunities on March 1st. With representatives from the Quebec provincial government and private sector, and what these opportunities could be for US companies that are active in mining, technology, equipment, and service sectors. And then we spoke earlier today about the EV and battery strengths of Quebec. That will also be the topic of a program by the Commercial Service on March 2nd. So it's great to see a variety of opportunities to learn more about this really dynamic sector and strength of Quebec. So these events, you can get more information on our website. I've got the link here shown where you can register through the US Commercial Service. So with that, I think we're at the bottom of the hour here, and want to thank everyone for your time today, and especially to our speakers today for giving us a window on the breadth of their knowledge and the opportunities that await US businesses in Quebec. And we look forward to sharing more information with you in the coming weeks, and encourage you to follow us online. So with that, we'll conclude today's session and wish everyone a very strong day. Thanks so much.
Thank you.
Thank you.
Thanks, everyone.